Let's get ready to mortgage. He is the prince of programs, guru of guidelines, master of matrices. He puts the fun in funding. Please welcome Mark, Mr. Mortgage, I Tell.
All right, my name is Mark Eitel, and this is the Mr. Mortgage Show. And you, my friend, are in the right place if you want the information and the data that you need to make better real estate and mortgage decisions for you and your family. I know there are a ton of questions surrounding real estate and mortgages right now, and how can there not be? I mean, the headlines are crazy. Each week there are another set of headlines that are doom and gloom. And if you read through all the data, there's some good news in there too. But on the surface, you know what it is? Truly, headlines have become that that bait and switch, right? Or not bait and switch, but clickbait. That's the word or term I'm looking for. Their goal is just to get you to click on the headline. And we talked about it last week. We went through an article together that on the surface indicated foreclosures were spiking, and the article and the or the headline rather, and the subheadline indicated that on the surface it would be a bad time to jump into real estate. I can't believe anybody would have read that headline and assumed any other. However, we took a deep dive into that article together on the air and quickly discovered that's not what the data was saying at all. The spike in foreclosure activity that was referenced in the headline was merely a product of banks not being able to foreclose during the pandemic because of the moratoriums. And then deep in the article, there was one sentence that I thought summed up everything. And that was that delinquencies, which, you know, inarguably are the leading indicator of a foreclosure, they were down to the lowest rate since 1999. So on the surface, that article indicated bad news. But as we read deeper together as a group, we discovered pretty quickly that there was a lot of good news in that article. And that article the headline could have as easily been delinquencies fall to the lowest rate since 1999. So anyway, that's a common theme with me. I always encourage everybody to deep dive the data, and I try to give you the information on this show each week that you need to be able to do that for yourself. So again, my name is Mark Eitel. This is the Mr. Mortgage Show. And if you want a deep dive into some of those articles and data sets that we use, you can always visit the Facebook page. I post everything there. And I will, after this show today as well, post everything that we reference. So go to Facebook and search the Mr. Mortgage Show, and you'll find everything that we talk about in each episode. So anyway, speaking of each episode, let's go ahead and get right into this week's. There was another interesting article that I read. It was a news release, came out in the realdeal.com, which is a mortgage and real estate aggregator site. And they were speaking to Lennar, their press release. And Lennar is a national home builder. I think most people know Lennar. They're really predominant in Florida. They're based in Miami. But they announced a $4 billion platform initiative in which they're going to acquire single-family homes and townhouses with the goal to rent to own. So they see an untapped market in the rent-to-own space, and they're going to jump on it. And I find that super interesting because here Lennar, a leading national home builder, feels good enough about housing in the future to want to buy it and rent it with option to sell to their tenants, which fascinates me because usually logic would dictate that if a builder saw trouble on the horizon in the market, the last thing they would want to do is go out there and create more inventory that they would have to carry during a downturn. So, I get it. They're going to rent these properties out. So in theory, someone else is going to service that debt for them. But nonetheless, they're stocking their shelves with inventory in what some people think is the face of a downturn. So one more indication that a downturn might not be so imminent. It might not be pending the way everybody seems to think it is. And if you listen to this show, or if you have listened to the show rather for any amount of time, my opinion is also that we don't have a crash cycle in the near term. Honestly, there's just not, there's just no supply. there's not any supply that I think is going to flood the market and offset the demand. And you hear me talk about it all the time. That's how you gauge a market's volatility, is supply and demand. And that's inarguable and across all markets. The only reason a stock goes up in value is because more people want to buy it than want to sell it. The only reason it goes down is more people want to sell than buy. And right now today, there are still many, many more people who want to buy real estate, here's Lennar included, than want to sell real estate. And if they're going to go out there and acquire existing homes, that's one more pressure on inventory, because they've got $4 billion going into this program that indicate they have a strong desire to be owners of real estate. So there's so many reasons why I think supply remains under pressure for the foreseeable future, which is what is going to determine what happens long term in the market. So for now, I don't see any indication of a downturn in the market, and this is one more indication of that. So anyway, speaking of market cycles, there was another super interesting article that I read this week, and this one was published online a year or so ago, and the data used in the article is a little irrelevant now because of its age. But one thing that really stood out to me was a great definition of the 4 cycles of any market. And this is around housing, but any market goes through a recovery phase, which is post a bubble burst. And then from recovery, they go into expansion. That market from expansion goes into hypersupply or oversupply. And then that starts a devaluation, which causes a recession. Now, I'm not talking about an economic recession. I'm talking about a recession specific to any particular market. So in housing, we go through a recovery phase, which was what happened after the bubble burst and the market bottomed. We went through a recovery phase, and then into an expansion phase, which is where I believe we are now. And here's why I say that. And I'm going to post this on the Facebook page also, because I think it's a super interesting read. But there are 5 questions that they're asking of each market. And here are the questions to determine which one of those 4 phases we're in. Is it a buyer's market or a seller's market? I think inarguably right now it's still a seller's market. Is the vacancy of property, or the vacancy rate rather, low, moderate, or high? Well, right now the vacancy rate is still super, super low. Is new construction increasing, moderating, or decreasing? Right now today, it's still increasing, and I base that on the new construction permit applications. The absorption rate, which means how fast a property is sold or leased when it comes to market. So think of how quickly the market's desire for a product absorbs its supply. So absorption rate is super high right now. You still see homes selling the first weekend they're on the market. And then rent increases are still moderate to high. Now, because of the way we answered those 5 questions, it's by definition an expansion market that we are still in today. Now, in my opinion, I think we're at the tail end of that expansion market. But before we get into a bubble bursting, we have to get into a market that is oversupplied. And that's where I go back to the whole supply and demand thing. And right now, today, there's still much more demand than supply. And those questions asked of each market clearly indicate that we need to go into an oversupplied market before we ever crash. So I share that just to put everybody's mind at ease. I think we are still in for, the foreseeable future. The housing market still remains strong, in my opinion. Now, I don't think we're getting 20% year over year appreciation, nor do I think we should. I don't think that's healthy. I think it happened so fast that a lot of people who were prepared and able to purchase missed out because they weren't ready. They hadn't got their mind around it. Things went too far, too fast, and there's some people left sitting on the sidelines, no doubt about it. And I feel for those people. I hope that there is something in the market that can change that. Maybe these rent-to-own programs will help people ease into ownership. So anyway, I throw all that out there just to share one more data set that indicates that for the near term, real estate still makes a ton of sense. And we'll dive deeper into all that during this week's show. If you have questions, you can call or text them to 561-291-8569. Sit tight for 2 minutes, and we will get to all your questions on the other side of this break. Hey, it's Mark Eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Here's another 5-star review.
My wife and I own a small business. And the way our accountant file our taxes, we don't show much income on tax returns. Because of this, it looks as if we don't make the money. This was a problem for our bank when we applied for a mortgage. But not for Mark. He verifies our income by using our monthly bank statements. Mark and his Mr. Mortgage team made a big difference for me. Yes, I am happy to recommend Mr. Mortgage Mark.
Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com, www.reallyGreatAgents.com.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now, 561-291-8569.
All right, we are back, and you heard the man. Give us a call or send us your questions via text to the Anytime hotline, which is 561-291-8569, 561-291-8569. Get your questions on the air via text, or you can just call and talk to Dom. My name is Mark Eitel. This is the Mr. Mortgage Show, where we like to answer all of your mortgage and real estate questions and give you the info you need to make the best decisions for you and your family. So one more time, 561-291-8569 is the Anytime hotline, and we'll be happy to get your questions on the air. If you're not a fan of texting or don't want to talk to Dom or I, just visit the website, www.mr.mortgage. That's mr.mortgage, never a .com. And there you can submit your questions as well. Also, too, you hear me talk about the Facebook page. We're posting a lot of data and articles to the Facebook page during the week, so you can check that out anytime at the Mr. Mortgage Show on Facebook. So speaking of questions, and my sidekick, my number one guy here, Dom, my producer, he's manning the question line, and I think he's got a couple teed up for us. So let me throw it over to Dom and see what we have question-wise. Dom, what do we have?
Yes, Derek just emailed us. Derek's asking, last week you talked about gifting the down payment to our children. Can this money be from our equity credit line? We've just started the discussion with our daughter and want to do this right.
Okay, Derek, that is a great question. And first, before I answer your question, let me say thank you for listening last week and tuning in again this week. So we must be doing something right, or you're just a glutton for punishment. So anyway, I appreciate you. Great question. So yes, you can use your equity line as the source of the gift that you're going to give your daughter for the down payment. And that's a common misconception. A lot of people are under the impression that the donor cannot borrow the money. And that's simply not the case. The caveat with a gift is that the recipient is not required to repay the gift. And part of the process of doing this, transfer of funds, there's a protocol that needs to happen. But also part of that protocol is that a gift letter is executed and signed by all parties, simply stating that the donor expects no repayment, and this is truly a gift. And that letter accompanies the loan application. So Derek, to answer your question, yes, you can tap your equity line to use as a gift for your daughter's home purchase. And honestly, that is not uncommon as we're moving into this, this cycle where a lot of people have a ton of equity. What did we say last week? I think it was 45% of U.S. households have 50% or more equity, which is just amazing to me. But what a great way to get your daughter started down the home ownership journey by using some of that equity. So great question. Thanks for sending it in, Derek, and hopefully that helps. Let's see what else we have teed up. Dom, what do we have next?
Next up, we have Kim, who called in. She just asked, we've been looking at houses for a few months. We're hearing there's a shift in the market. Do you think we should wait before we buy? It's our first house.
Okay. Hey, Kim, another great question. Thank you so much for that. And yes, you're right. There is a shift in the market. No question about it. We're seeing, and again, this isn't, it's not happening instantly. Nothing does, but we're seeing, days on market for new listings. Houses are staying on the market a little bit longer, but by a little bit, it's just a few more days. However, not discounting the fact that there's a shift happening. We're all aware of it. We all feel it. We all see it. And I commend you for watching the data and realizing that too. Here's the challenge. If you're trying to time the market and by shift, you're assuming that prices are going to go down and that you're going to be able to quote unquote score a better deal later, that may not be the case. You may be costing yourself today's opportunity by betting on tomorrow's unknown. And that's always a dangerous play. My suggestion would be that if you can truly afford the property and you're buying your primary residence and you're not getting caught up in the headlines and you're looking at your budget and you can truly afford this, it makes a ton of sense to become a homeowner. I mean, look at the last question. Derek is gifting equity to his daughter to help her get into the market. So a lot of people still believe that real estate is a wonderful place to be. And let's face it, the reality is you're most likely paying a rent payment right now. So what is that payment? And let's just use round numbers. I don't know. I'm guessing. Is that payment $2,000? Is it $2,500? I don't know. But I do know for $2,500 a month or less with an FHA loan, you can purchase a $325,000 house because I'm working on files every week that meet that criteria. So hopefully that encourages you. The challenge I have with waiting is that let's say you do wait and let's say prices moderate a little bit. Actually, let's not say that because we don't know. And I'm not quite convinced that that's the case. But even if they hold flat, the cost of money is going up. And there's still indication that we've got some legs on this upward cycle of interest rates. So each month that you wait and interest rates continue to tick up, it's becoming more expensive anyway because the cost of money is going up. So don't let that get in your way. Look at your budget. If you can afford to buy the house, it's the house that you want to live in. I encourage you to make that move. And I'm happy to walk you through all the pros and cons and answer any questions you have. We can do a deeper dive into this topic. Just give me a shout during the week. 561-291-8569 is the Anytime hotline, which rings here when Dom and I are in the studio, but it also pushes to my office during the week. So hopefully that helps. If you can do it, do it. And congratulations on being ready to take this step. So let's throw it back over to Dom to see what else we have teed up. What do we have next, Dom?
Pat just sent in this email to us. He's asking, I've been with my company for 11 years. I'm getting ready to start my own company. It's the same type of business. Will the bank statement loan you talk about work for me? I'll be ready to buy in a few months.
Okay. So Pat, great question. I mean, that's a really good question. A lot of people are in this circumstance right now. I mean, a tremendous number of businesses were started as a result of the pandemic, and people kind of reevaluating their work-life balance and making these decisions to kind of chart their own path and not be at the mercy of their boss or their company's decisions or policies. So we've seen a lot of newly self-employed borrowers recently. So, hey, first, Pat, congratulations on making this move or being at least willing to take this step. I know self-employment can be super rewarding, so I'm excited for you. But in the world of homeownership, if I am understanding your question correctly, you're thinking of starting the company and buying the house in the near future, which could be a challenge because most of the time you're going to be required to have 2 years of self-employment history. Sometimes we can get away with 12 months self-employment history. The fact that you're staying in the same industry, it sounds like you're starting a similar business. That's actually a plus because you have what did he say, Dom? 11 years of experience with your current company. So clearly you've got experience in this industry, but the challenge is that bank statement loan or not, you're still going to be required in most instances to have at least 12 months of self-employed work history. So I know that's probably not the answer that you want, but I would encourage you, if you're not unhappy where you are and you've got, obviously good employment history and your wage qualifies you for the property that you are looking for, it might make more sense to do that in a slightly different sequence and go ahead and make the home purchase and do that on the stability of the income and the employment that you have, and then reevaluate when you want to start the company. Maybe, push that back a little bit so you can make this transition. But if starting your own company is just an amazing opportunity that you can't pass up right now, I certainly understand that. But you might have to put the home ownership piece of it on hold for 12 months. But outside of that, the bank statement loan makes a lot of sense. It makes a lot of sense for a lot of self-employed people because typically, you hear me talk about it all the time. We write as much of our income down as we can so we pay the fewest taxes possible. But anyway, you hear the music. That means we're going to run into another break. We're going to be right back in 2 very short minutes to answer more of your questions. Stick with us. Thanks. Hey, it's Mark Eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Here's another 5-star review.
We started our loan with a different company. They said we were approved, but at the last minute they told us there was a problem. I still don't know what went wrong, but thankfully our real estate agent told us about Mark. I was pretty stressed, but it's the perfect house, so we gave Mark a shot. He got it done. I'm not sure what was different, but I don't really care. We even got a better interest rate and with less money out of pocket than the first guy quoted us. It was a great surprise. Yes, I'm happy to recommend Mark and his Mr. Mortgage team.
Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now, 561-291-8569.
All right, we are back. My name is Mark Eitel, host of the Mr. Mortgage Show, and you heard the man. And that, by the way, is definitely a voice that you want to listen to. I love the announcer. But yeah, you heard him. Give us a call or send us your questions via text to the Anytime Hotline, 561-291-8569. That's 561-291-8569. That rings right here in the studio while Dom and I are doing the show. But it also pushes to my office during the week. So truly, that is the Anytime Hotline, 561-291-8569. Or I love your questions via the website too. The website is www.mr.mortgage. Never type in the .com, just mr.mortgage. And you can submit your questions there as well. So having a lot of fun so far this week. And speaking of your questions, I'd love to keep those going. Let's throw it over to Dom and see if we have any more questions teed up. Dom, do we have anything?
We have Judy who just texted us. Judy's asking, not sure if you can answer this. We've been looking at a new construction homes. We found the perfect house and builder, but we're nervous to get locked into a contract. What if prices are lower in 12 months? Can we cancel the contract?
Hey, Judy, that's an interesting question. Usually it's the other way around. People are telling me, hey, listen, the builder is trying to cancel the contract on us because the prices have gone up, the values have gone up so much that they want to resell it at the higher value. So interesting question. I don't know. Honestly, I don't know. I would refer you to a real estate attorney. If you don't have a real estate attorney, I'd be happy to give you some names and numbers. We work with a bunch of them, but my gut tells me no, but that's, I'm not a real estate attorney. I've not seen the contract, so I'm going to suggest that you contact a real estate attorney to get that answer. But super interesting question. I'm guessing that your thoughts are that the market might pull back a little bit and you're thinking, you don't want to overpay for a property. So interesting thought. I think if you've listened to the show for any length of time or visited any of the resources that we share, you've got a pretty good idea of why I think you're okay as far as real estate values in the near term are. And actually in the foreseeable future, because we talk about it all the time, I just don't see where the new supply is going to flood the market to push prices down. I just don't see that yet, but that's not to say it won't happen. A meteor could hit and all kinds of crazy things could happen. We got killer bees. We have, what's the latest? Monkeypox. I thought that was a joke. Somebody shared with me, are you worried about monkeypox? And I'm still not quite sure what it is, but I guess it's the latest outbreak of who knows? I'm not going to go there. But anyway, to answer your question, I'm going to suggest that you contact a real estate attorney. But my gut tells me that most likely the builder is not going to want to let you out of the contract if prices were to go down at a future date. But also, one more time for the people in the back. I just don't see that happening. I really don't. Visit the Facebook page, the Mr. Mortgage Show at Facebook. There are some videos on there. There's some content that we're sharing on a daily basis that supports my belief that housing is going to remain a safe bet in the near future. So I hope that answers your question. Congratulations on finding a place that you want and a builder that you want to work with. I just doubt that they're going to let you out of the contract at a later date. But if they do, that's awesome. Let's throw it back over to Dom and see if we have any other questions. Do we have anything teed up, Dom?
Matt just sent in this question via email. My landlord is willing to sell me my townhouse, but neither of us know what to do next. Do we need a lawyer to write up a contract? Can we do that ourselves?
Hey, that's a great question, Matt. And you're doing what's next. You're giving us a call, or in this case, send us a text. So, hey, thanks for that. And to answer your question, yes, you can write the contract yourself. There are a number of resources on the internet where you can get a blank contract. Now, I would caution you, if you don't have a good understanding of the contract, I would caution you against writing it yourself, because you might put you or your landlord at a disadvantage, or, some unnecessary legal exposure by the way you write it. So, let me say this. You're going to need a title company to facilitate the transaction for you, to close the deal, to record the deed, to close the mortgage. There's a number of title companies that have real estate attorneys on staff or that are owned by real estate attorneys. And one of them can assist you with writing the contract and with closing the transaction. So I guess that would be my suggestion. I would contact some title companies and see if they have an attorney who can assist with drafting the contract and then with closing the transaction for you. And then you've killed two birds with one stone. Now, if you don't have anybody that you are comfortable with or you don't know where to begin looking, I would be happy to direct you to a few of the title companies and title attorneys that we work with and let you select from them. There's a few that I feel really, really good about, and I know you'd be in good hands with them. And then from your standpoint as the buyer, you're going to want to make sure your mortgage is in order. Go ahead and get that application in process, get your approval, maybe run a value search on the property, make sure you're paying a fair price for it. And actually, you know what? If you want me to, I'll run one of those value reports for you. Just visit freevaluereport.org, freevaluereport.org, and just give us a little info about the property and your email address, and I'll shoot you back the value report on the property so you'll have an idea of what the fair market value of that property is. So those are the big things. I would lean on a title attorney to write the contract for you, or a real estate attorney rather, to write the contract for you. And most often they'll be affiliated with or may even own a title company that can help you close the transaction and then do your due diligence on the mortgage side to get yourself ready. And if you don't have a mortgage guy, I'd be happy to help you. If you do have one, and you just want a second opinion, I'd be happy to do that for you too. But hopefully that helps. Congrats on working this deal out with your landlord. Hey, listen, how awesome is that? You're not going to have to get a moving truck. You're not going to have to get any of those, what do you call it? The new address labels. I don't even know what to call them. But yeah, you've got none of those headaches of moving in your future. So congrats on that. And hopefully that answered your question, and I'm happy to help you more if you need it. You can call us anytime at 561-291-8569. So let's throw it over to Dom and see if we have any other questions. What do we have, Dom?
All righty. We have Jody, who is asking, the house I'm buying should be worth around $425,000, but I'm getting it for $375,000. Can I show the extra $50K as a down payment? I'm trying not to put any cash in the deal.
Hey, Jody, that's an interesting question. And first, let me congratulate you on finding a deal in this market, because a lot of people are running around out there saying that there are no deals left in real estate and that it's not a good time to buy because you're overpaying for everything. And here's an example of somebody who maybe by chance, maybe by skillful negotiation, who knows, but it looks like Jody found a great opportunity even in this market. So that is super cool. But to answer your question, I don't know that I'm completely understanding it. If you're looking for a strategy that's, kind of like a shell game where you're just pushing the numbers around the paper so that it appears that you have $50,000 in the deal, that's nothing that I can advise you on doing. I mean, I would strongly suggest you don't, because I think that's illegal. Now, if the seller is a relative and the property truly appraises at $425,000, they could gift you the $50,000 in equity. So you're just bringing the $375,000 to the table in the form of a cash or a loan. That's doable. A $425,000 purchase, assuming the property does appraise for that, with a $50,000 gift of equity may be a way to make it work, but that would have to be, a relative that's gifting you the equity. But as far as just kind of pulling that old, I don't want to imply that you're trying to do anything illegal, because I understand the logic behind the question, but I don't know of a legal way to do that outside of, as I described, with the gift of equity strategy. So hopefully that helps. If you have further questions on that, just hit us on the Anytime hotline, 561-291-8569. And you hear the music. We're heading into a break. We'll be back in 2 minutes. Hey, it's Mark Eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Here's another 5-star review.
As a realtor, I have a bunch of mortgage brokers to choose from, but I prefer to work with Mark and his Mr. Mortgage team. In this crazy market, there is no room for error, especially on the mortgage side. Mark's team moves fast, keeps everybody in the loop, and makes things happen. They always give my clients a great deal and take the time to walk them through every step of the process. When you're considering a lender, I encourage you to talk to Mark Eitel and the Mr. Mortgage team.
Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallygreatagents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallygreatagents.com, www.reallygreatagents.com.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now, 561-291-8569.
All right, we are back. My name is Mark Eitel. This is the Mr. Mortgage Show, and you heard the man. You can get your questions on the air right now today by calling 561-291-8569. That's 561-291-8569. Or if you're not comfortable calling in, you can shoot a text to that same number, 561-291-8569, or do it the old-fashioned way. Visit www.mr.mortgage. That's mr.mortgage, never a .com. And there you'll be able to submit your questions right through the website, mr.mortgage. So speaking of questions, we've had some really good ones so far today. And a lot of people are kind of, I can tell by the questions that we're getting, a lot of people are concerned that, this shifting market might mean that it's better to hold off. But hopefully we've dispelled that myth and given you the resources you need to be confident in your decisions moving forward. But anyway, let's throw it back over to Dom and see if we've got any additional questions teed up. Do we have anything, Dom?
Nancy just sent us an email. She's asking, I've heard you talk about the difference in this bubble versus last time. I just saw an ad run for a stated income interest only loan. Is history repeating itself?
Okay. Yes, Nancy, I've seen those ads as well. And it does feel eerily similar to last time, doesn't it? The interest only loans and the 40-year amortization. But that particular loan program, as I've seen it advertised, and we do have a program like that available through our practice, but it's designed for investors. So another big difference with that loan product is it requires a down payment of usually between 20 and 25%. That's a huge difference between now and back then. Back then, you could use an interest-only loan, often with stated income and stated assets to qualify, which was horrifying looking back on it, to 100% of the purchase of a primary residence. And that's where it was super dangerous because people were buying homes they couldn't afford and using these loan products to get them approved. The difference this time around is that loan is designed for an investor who's putting 20% down, and we're looking at the cash flow of the property to make sure it can support the debt service on that particular loan product. So the income component is being verified in the sense that we're looking at the rent rolls of the property. So great eye for spotting that and pointing out the similarities between the bubble burst, but I don't feel that it's an indicator that we're heading down that path by any means. And we watch just about everything. When the temperature changes and the wind blows, the hair on my arm stands up, and I wonder if this is an indication of a market change. So we watch everything pretty closely, and I appreciate your question. Dom, do we have any other questions?
We just got a text from Todd. Todd's asking, I caught the tail end of you talking about investments and assets for income without having to sell them. Can you explain? This might work for me.
Hey, Todd, I think what you're talking about, and that's a great question. Thank you for it. I think what you're talking about was last week we were talking about, we were specifically talking about crypto, but we mentioned that we utilized an asset depletion calculation to derive a monthly income from somebody's cash holdings. I'm sorry, non-cash holdings. And, well, actually, it would work for cash holdings too. But anyway, let me explain. I'm sidetracking myself now, but let me explain how it works. So this is designed for somebody who has significant assets, but perhaps doesn't have a lot of income. So you might have a big retirement account, you might have a big IRA, and you get Social Security or disability or some other income, or maybe you just have a part-time job. It's not uncommon. So there's a multiplier that can be applied to your IRA and your retirement accounts to determine what monthly income could be derived from pulling assets out or pulling cash out of those accounts. So that's why it's called the asset depletion calculation. You don't have to pull the money out. We just say, okay, he's got X amount of dollars, and that means, you know, he could have a monthly income of Y derived from pulling money out monthly. So hopefully that helps. It's a wonderful opportunity for people who are retired or have other forms of income, but have significant assets that they can utilize as the assets necessary to use that depletion model. So I know that's not a very clear question because I need a little more information. I'd love to talk to you in detail about it and encourage you to give us a shout. 561-291-8569 is the Anytime hotline. So hopefully that helps. The really cool part about that is you don't have to withdraw your money from your accounts to make that work. So there's some other strategies around that too, where you can set up distributions and that can qualify you also. Sometimes that's advantageous, but I'm happy to walk you through the details regarding that strategy. It just might take a little more of a conversation than we have time for at the moment. So I'd encourage you to reach out to us. So thanks again for your question. What else do we have, Dom?
Jessica just sent in this one. She's asking, can I count my alimony and child support as income on my application?
Okay, Jessica, the good news is yes, you can. Here's the caveat. We need to be able to look back 2 years. So we need to verify that you've received it for the last 2 years, and that through the marital settlement agreement, we're able to confirm that you will receive it for the next 3 years. So looking back 2 and looking forward 3 years, if we're able to confirm that that income is going to remain in place and has been paid on time in accordance with the MSA for the last 2 years, then yes, you can use that. Absolutely. Make sure that that's getting recorded by being deposited in your account. We had a situation, and this is a real situation, where the husband was paying the alimony in cash and we were not able to verify that. So confirm through your MSA, or I'm sorry. So we will confirm by looking through your marital settlement agreement that the amounts and the timelines of the required payments, and then confirm that you've received them for 2 years and that you will receive them for the next 3, and then he would have had to pay them on time, then we can use them. Absolutely. So great question. And if you have more questions surrounding that, please give us a shout. 561-291-8569 is the Anytime hotline. So out of breath. Let me throw it back to Dom for another question.
Tammy emailed us this. She's asking, we've been thinking of doing a refinance so we can remodel the house. Can we pay off some bills at the same time?
Hey, Tammy. Thank you for your question. Yes, you can pull cash out and pay debt off, and then also use that cash for your remodel. There's no restrictions on that. You can do it in the same cash out refinance. So where there may be a little confusion, a few shows ago, I was talking about a loan program that was designed for like a major remodel where you're putting a big addition on your house, and that particular loan works almost like a construction to perm loan where, you're refinancing your mortgage position, but you're also paying out your contractors as your project is going on. That one's a little more complicated. I'm not saying you can't pay your debt off with that, but you might have to pay the debt off at closing to make that work. But yes, to answer your question, you can pay off credit cards, you could pay off car payments, motorcycle payments, boat payments, whatever you have, you can pay off all of that consumer debt, as we call it, as well as use the remaining cash out for your remodel project. So I hope that helps. That was a great question, but we're going to continue answering your questions. But before we do, I just got a text via the Anytime hotline, and I wanted to answer it real quick. The data from this week's show will be up after the show. I haven't posted it to the Facebook page yet. So the gentleman or lady, I don't know why I assumed it was a gentleman. Could be because of the tone of the question, but or the statement rather. But for the person who just shot in the text regarding that those articles are not being found on the Facebook page, I'll have them up there by the end of the afternoon. Once we get off the air and Dom and I do a little cleanup here in the studio, I'll post those articles to the Facebook page. But thank you so much for checking that out. And that's a perfect segue for me to encourage everybody to hit the Facebook page. Just go to Facebook and search The Mr. Mortgage Show, and there you'll find all of the articles and the data that we use when we're doing the show and when we're answering your questions. So with that being said, you hear the music in the background. That means we're going to run into another break. We're going to be back for more of your questions right after this. Thanks. Hey, it's Mark Eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Here's another 5-star review.
We kept our business above water with credit cards during the pandemic. I'm glad we did. Business is better than ever. But I didn't want to be a slave to those credit card payments. I called Mark about the rec loan he advertises. Long story short, we did a rec refinance and paid off everything, even the car. Now we only have the mortgage payment. We're saving a bunch every month. Yes, we are happy to recommend Mark and the Mr. Mortgage team.
Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now, 561-291-8569.
Okay, we are back. And yes, shoot your questions to us via the Anytime hotline, 561-291-8569. That's 561-291-8569, and we will get your questions on the air. And I know I was heading into that break, and I was getting chastised for not getting the article up on the Facebook page fast enough. Well, rest assured, it's up there now. I actually pinned the 4 cycles of a market chart to the top of the page because a lot of people, I think, will find that super interesting. So check out the Facebook page. Go to Facebook and search The Mr. Mortgage Show, and you'll see that data right at the top of the page. So speaking of your questions, let's continue with that. I know Dom's got one teed up for us, so let me throw it over to Dom. Hey, what do we have?
Greg left you a voicemail real quick. He's asking, I'm a disabled vet. My main income source is my disability income and Social Security. Is there any way I could get a mortgage?
Hey, Greg, that's a great question, and thank you so much for it. But before I answer the question, I just want to thank you for your service. I know a lot of you do know how important the veteran community is to me and my family, and I just want to say thanks for your service, brother. We greatly, greatly appreciate you. So the good news is, yes, you can use your disability income, you can use Social Security income to qualify for a loan. So we're going to want to confirm that that's going to remain in effect moving forward for the next 3 years at least. But yes, you can use both forms of income to qualify for the loan. And you mentioned that you're a vet. So if you're VA eligible, then a portion or maybe all of your VA funding fee will be waived by the VA. Now that's predicated on your disability level, but you could go into this with 100% financing and no VA funding fee. And with the VA loan, there's no mortgage insurance. So super cool opportunity for you there. And lastly, a lot of people are unaware of this, but depending on your level of disability, you can have a large portion of your property tax exempt. So you'll save money there too. Again, predicated on your disability. But I'll be happy to answer any of those questions for you and walk you through the process. And man, super excited that you're looking at buying real estate, and very encouraged by a lot of this week's questions, because so often people are getting hung up on, the headlines. And I say it all the time. I can't say it enough. The headlines aren't the data. The headlines just are there to grab your attention, and it's up to you to read past those to find the data. So super encouraged by all of the questions that we've had so far today. And I go back to that opening segment. There are a lot of indicators that we are still in a strong housing market. And I get it, right? It sucks for a lot of people that are priced out of the market. We got here really fast, and we feel really overcooked at this point. But until supply comes in, I think the demand continues to support housing. And a lot of these big companies are buying properties with the intent just to rent them, because people are not qualifying for mortgages at these higher prices and these higher interest rates. So yeah, there's so many reasons why I think that we're okay for the time being. I'm cautiously optimistic, but anyway, thank you for your questions. And I've got a favor to ask. I don't know how many of you listen to us regularly. If you don't, I would encourage you to. We certainly appreciate your participation. But if you've found any of this interesting or any of this insightful, please share the show. We're always trying to grow the audience. We're always trying to answer questions and hopefully provide some information to you that gives you the data that you need to make better decisions when it comes to real estate and mortgages. So my ask to you is, if you have any friends or family members or coworkers who are talking about real estate or thinking about real estate or are considering buying or selling or refinancing, please introduce them to the show. I'd love to answer their questions and would be happy to help them if there's anything that we can do for them. So that being said, you hear the music behind me. That means we've wrapped up another week. Thanks for your questions. Thanks for your participation on the Facebook page. That Facebook page can be found at Facebook by searching The Mr. Mortgage Show on Facebook. You can visit the website, www.mr.mortgage. That's mr.mortgage, never a .com, mr.mortgage. And one last time, the Anytime hotline is 561-291-8569, and that pushes to my office during the week. Have a great week. We'll see you next time right here, same station, same time. Thank you.
That's a wrap. Join Mark Eitel next week for more thrilling, edge-of-your-seat discussions about real estate and mortgages right here on The Mr. Mortgage Show.